Good evening and welcome to the Australian Stock Market Show. Now, the All Ordinaries Index has traded down the past 3 weeks. So, can we expect more of this, or will the market return to being bullish? Stay tuned as we'll talk about that shortly. For our main topic in tonight's show, we get into something that will excite your senses, and that is cheap stocks and multi-baggers to make 100% or more. First up, we'll share our hot stock tip for the week. So sit back and relax. Tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. We have a great show lined up for you tonight, and this includes some great stocks including Pilbara Minerals, Spartan Resources and more. So sit tight as we get into those soon. I'm Dale Gillham and I'm your host for tonight, and joining me is our highly experienced analyst team and professional traders, Janine Cox and Philip Tortevsky, and we're Australia's most trusted stock market educators. Hi Janine, hi Phil, how you doing?
Good, how are you this evening?
Well,
you look
fantastic.
Really happy and bright and sparky. What made your day today?
Well, you showed up. What more can I say? And Phil's here too to support me. So if
I'll just hang in the side here.
Well, if Janine gets the boxing gloves up here, Phil's here to protect me.
Oh, there's a big gap there.
I know, that's what I like about this new set.
Yeah, I don't think you're safe.
You're too far away.
I'm in the firing line now, no?
You are in the firing line. You've had your week, Grace, and now you're into the firing line. But anyway, tonight, as I mentioned just a minute ago, we'll get into cheap stocks and multi-baggers that could rise 100% or more. So stay tuned as we get into that and more very soon. But first, we need to get into this week's hot stock tip. Now, Phil, I believe you've got the hot stock tip for us tonight.
Yes, I sure do. If we take it to the market index, we've got Drone Shield Limited today. And now I really like this stock. This stock is in a space that I'm really excited about, the artificial intelligence and the robotic space. The company itself is provides artificial intelligence-based platforms for protection against advanced threats such as drones and autonomous systems. Yep. They are mainly situated in that defence area or sector, if you will. Yep. Some metrics on this particular one. It's got a year-to-date return of 4%, which is in line with the ASX 200, so not too bad. It has a market cap of 235 million.
Okay, so on the smaller side?
Smaller side, yep. And it is ranked number 653. Now, last week I picked a stock that was ranked outside the 200. Mm-hmm. And this week I've gone a little bit deeper, outside the 500, so I hope I've got a job here next week.
Well, if it's a tennis player, you'd be concerned, but not a stock.
Yeah, I've gone digging, but look, I really like the story here. It's a fantastic story. It's in a space that, drones are being, it's being used for so many purposes, so many fields, medicine, healthcare.
Mining, you name it.
Everywhere. I know you like this space.
Yeah, we're talking about pizza delivery.
Pizza delivery.
Yes. Yeah, Domino's Europe.
Yeah, get your pizza here. So we're going to take a look at the charts?
Yes, we will. Let's get to the chart now and just take a bit of a deeper look. So what we've got up here is the monthly chart, and I've made some markings this week. So
not scratchings.
Well, if I said the wrong thing again, scratchings. No. Okay, markings are okay. But yeah, look, I thought I'd mark out the chart a little bit here just to give the guys a bit more. So what you can see on your chart in particular, we'll start off with I've got marked A and B, and they represent the all-time low originally back in 2019 in April, and then again more recently in April 2020 where the stock came and tested it, and obviously it's had a nice little run up since. What's quite interesting about what I've marked, particularly that A and B, it's a bit of a technical theory or technique, if you will, which we call double bottoms, and I know a lot of the students out there will know what I'm talking about, but if you don't know, it's okay. It's just a technical analysis of a chart. But more importantly, with these double bottoms, it signifies that a stock is positioned at a very significant low in its life. So very promising for this particular one. You can see that what we've also got a trend line, which is in this grey grey line here, and the stock now is currently poking its head above that just a little, which again is quite promising given, you know, the long-term momentum of the stock is looking to change. And we've got a few projections on there as well. You know, we see that blue line is a target that I'm envisioning for this particular one. If it were to break through the all-time highs, there's about 120% in this. So I know the topic today is multibaggers.
It's one of our first multibaggers.
Yeah, you've picked one already.
I've picked
straight out of the blocks.
Yes,
yep, well done.
And just to also note, for everyone out there, it is a stock that, you know, it's 40 cents. So it could be considered speculative, if you will, but it does have a weekly average volume turnover of 4.6 million shares, so definitely liquid enough to trade.
Liquid enough to trade.
I like the fact that you've picked one that's got this nice little pattern that's unfolded here below this resistance level, because when Dale and I have looked at lots of stocks in some of our recordings last year, and we saw how this sort of formation that was unfolding was actually a precursor to a strong rise. And it's a pretty classic thing with these lower liquidity shares. And some of them can be just a couple of months, some of them can be a lot longer than that, but eventually some of the greatest rises happen out of those sort of formations.
Well, I'm going to leave it there. That's great news for everybody. So stay tuned. What a good stock, Phil. But that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for tonight. But before we do right now, it's your opportunity to get involved in the show and have your questions answered. Now remember, we do prioritise phone callers, so call now on 0392909988. That's 03 for Melbourne, 92909988. Or you can actually text your question to the number on your screen. Now the first caller into the show right now gets a free copy of my latest book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 92909988. Now while you do that, whilst tonight we will take a look at the sectors in the Australian market, so let's get into the charts.
On your screen right now is a watch list of the sectors in the All Ordinaries Index. All right, Phil, we both like these some of these bigger sectors, and in terms of the list of sectors we've got there, consumer discretionary is right up the top at the moment, which is interesting. So we've seen some big rises with JB Hi-Fi, for example, which looks interesting. We've got one of the stocks that we've got tonight. I'm not sure if it's in the first part. I think it's in the first part. I hope it is. Otherwise, it might be in the Talking Wealth part, so you might have to subscribe quickly tonight if you're interested in that one. No hints there. So looking at the list here, financials, Phil, a second in place at the moment, which is great to see. So look, materials is at the bottom, utilities at the bottom, and the real estate is also at the bottom, some of the biggest ones. What is it that stands out for you? Which one do you favour more?
Look, I'm not surprised that materials are down the bottom. You know, they're probably the most volatile sector of the lot. They've had a very big run. For me, I'm going to go somewhere in the middle, and I don't mind, and this is probably the first time I'm saying this in years, I don't mind the telcos, communication services.
So are you telling me you're a trader who trades all sorts of things, including currencies, and you're going to play it safe? Is that a first?
I think so. It's a first.
You're out of your depth?
Look, no, you got me there, but it's a sector where, you know, we've looked at the charts. Obviously, we'll get into that soon, but it's one of those ones, just like you mentioned. Right now, I'm seeing a lot on the market of sectors and stocks having that nice consolidation and poking their heads out. You just mentioned JB Hi-Fi had a really nice poke out. So this is another sector where I think it's priming itself ready to potentially make the next move up.
So what sectors are we looking at their charts on?
Well, that's a
what
secret.
I'm waiting to hear.
It's coming up right now.
Oh, it's coming up right now. You're keeping me
Let's have a look. No, I don't want to keep you in suspense any longer, so let's get into that.
Cool.
All right.
I'm getting older, so keep going.
Okay, well, IT, on communication services, that's right up your alley. That's what you're talking about. So this is Telstra dominating this one.
Correct, yeah. Look, Telstra's the big player here, and for me, it's probably the nicest looking stock out of the bunch. I know Macquarie...
Did you say that correctly? What did you say then? You said Telstra. That used to be a swear word, didn't it?
Well, we used to call it DOG,
but there's a different CEO now, and it's a woman. Yay.
I like it.
She's a woman.
It hasn't been too nice over the last couple of months, but I do like it at the moment.
I'm liking it too, and what they're doing in terms of that restructure is great. So So where do you see it going, Phil?
Yeah, look, again, it's one of those ones where it's forming this nice consolidation pattern around that 1500 well, the sector here, the 1500 level. And I see, look, a break above 1600, 1700. I think we're just going to get a nice push up. It is squeezing a little bit at the moment. It's found those lows around 990 over the past, since 2017. So I'm bullish on this stock. Given, I've said 3 words in the same set, given it does poke its head out now and start rising up.
Okay, so would you be brave enough to suggest that it's more likely to get through the 2000 mark?
Very possible. Yeah, very possible. I mean, that's a distant target. I'd say 1800 would be first, but look, not out of the ordinary, definitely.
Okay, great.
Okay, all right. Well, that is it for our thoughts on the sectors in the Australian stock market. Now, before we get into our first email, remember to get your questions answered live right here on air. You need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first email question. Now, our first email is from Jackie and Ben, who write, "Hi Dale and Janine. We currently have a smallish portfolio with our best stock sitting at around 186% up. I'm hoping for a deep dive into Spartan Resources. Now, we bought in for an average price of 16.2 cents. We have no real technical analysis experience, but I do listen closely to all your podcasts and follow a range of trading techniques. Would love your insights into this gold stock. Many thanks, Jackie and Ben." So what have you got for Jackie and Ben, Janine?
Well, this looks really interesting and very much a specky stock. So
I never know how you're going to go. When she says, "Oh, this is interesting," is it good
so
or
shall
bad?
I say go girl?
That's better. Go, Jackie.
Go Jackie.
So you like this stock?
Yeah, so I'm looking at this one. It's not one that I'd trade myself, however, because it just is very
we like
illiquid.
gold.
How it's really highly illiquid. You can just see the volatility from the weekly chart, and some of our students know what I'm talking about there. However, more recently, it's actually changed form, which is great to see. So I'd like to see it find support somewhere around this 38-cent mark and then start to move back up. I'd be watching very closely. If it falls below the low in October of 36 cents, I'd be a bit concerned about it. But I'm not too concerned. Given the volatility of this type of share, it's not unusual for them to come back like that.
Yeah, look, I agree. I like that it has changed its personality. I mean, you've got to remember this stock's gone up from 10 cents all the way to 50 cents. So a pullback is not out of the ordinary for this particular one. What I do like is that the volume is falling in line with, this recent fall. So that might bode well for the next run up. Again, like you said, if it holds this 40 cents.
Can I add something here?
Yes,
like
please.
Jackie's asking about Spartan Resources, SPR. The stock code on that tab is SPR, but read the name of the company. Has it changed its name?
Oh no, actually maybe it has. So there you go.
I just noticed that. I didn't check that before, so hopefully it's just changed its name because it's the same stock code.
That is the same stock code.
Thanks for your thoughts on that one. Anyway, I'm sure it's a great stock, Jackie, so go to that one instead of whatever it is. But anyway, we do have a caller on the line right now. Welcome to the Australian Stock Market Show. You're on with Dale, Janine and Phil. Who have I got there? Is it Joseph?
Correct.
Fantastic. Welcome to the show, Joseph. Where are you from, mate?
Town called Queensland.
Look, good man. It's probably really hot up there today, isn't it?
It is. It's 30 odd degrees now where I am.
Whew, I'm glad we're down here in Melbourne where it's a little bit cooler. But anyway, you do have a question for us tonight, so what is it?
How do you know when a resistance or support line comes about?
So where do you know a support or resistance line comes about, or is it confirmed, you mean?
Yeah, in other words, if I'm looking at a chart,
Yep.
how do I know where to put the resistance line and the support line on a chart?
Okay, that's easy. Do you have a specific stock in mind, or you just want the guys to talk about it on any chart?
Well, on any chart, but I'm looking at MP1.
Okay, you're looking at Megaport. No problems. We can have a look at Megaport for you. So I'll get the guys to show you. Just basically, it's probably a little bit more technical than they can explain, but they'll give you a really simple way of doing it that you can apply straight away. I'm sure you've got a ruler or a pencil at home that you can actually apply that onto a chart. So, Phil, do you want to take it?
Yeah, sure.
Thank you for calling in, Joseph, by the way, too. So, Phil?
Are we going to
want
be
monthly or weekly?
drawing some horizontal lines on for Joseph?
Just do some basic for Joseph.
So generally, Joseph, what we're looking at here with support and resistance, the most basic form is analysing previous peaks and troughs on a chart. And now I'm going to hover my mouse cursor over a few. We won't get into the specifics of how you identify peaks and troughs because there is a methodology behind that as well. But what I'll do, I'll bring up a horizontal line and we can draw it under this trough here, something like that. And we can zoom that all the way across there. So basically we're just trying to connect where prices touched in the past.
But how does he know when it's actually confirmed, right? When the turn is confirmed?
That's an extra question.
That's the million-dollar answer, isn't it?
That's the million-dollar question. The first part of it is to identify it, and I guess what you're asking in terms of confirmation, I know you've got some theories on that and models, of course, but there are ways. There's techniques around reversal points, and we spoke about this last week, I believe, with a
little bit.
Look, just the one thing that comes to mind for me is just if you really can appreciate the psychology of the people who are trading the stock, looking at the bars, that's one of the key things. And you know, you've talked about this for years. It's in the course. It's in the book. You talk about it.
Yep.
So get the book if you haven't got it already. Is the first thing.
In my second book, it is.
Yeah, it's in the second book. And if you look at the chart here, I'm just going to show you that reversal. So you can see here that in March 21, the stock actually came down. Let's just say, for argument's sake, that Phil was right and that he's identified one of the strongest levels on the stock, because there is a process of doing that. It's not just drawing a line. You know, Phil's just shown a simplistic way of doing it. But you can see how that there's been this really strong move up out of it. That is actually showing you that the sellers have actually exhausted and the buyers have come back in. So if you're thinking about it from the point of view of that tug of war between buyers and sellers, you have a really good understanding of what's going on.
Yeah, I find sometimes it's people overuse support and resistance, because if you can draw a line anywhere you like on a chart and you'll hit something that'll go, oh, that's support or resistance. But the important thing is how strong is that support or resistance, not whether there's one there or not. So if on a scale of 1 to 10 you have a resistance level that's a level 1, as opposed to a level 10 being the strongest, well, it's not going to be much resistance, is it?
Exactly.
So that's why we can't fully answer his questions, but that's stuff we talk about in my book and also in our courses about how to really
I'll give him
make
10
sure
out of 10 for that question. It's a fantastic
I think
question.
it's a fantastic question. So, but I do believe we've got another caller on the line. Welcome to the Australian Stock Market Show. Is that Teresa there?
It is.
Hi, Teresa. Welcome to the show. Where are you from?
From the Gold Coast.
Awesome place. Now, you've got a question for us tonight?
I do, actually. I have done your course, so thank you. It was great. My question is, I'm doing up my watch list. When I'm writing out all the dividend PE ratios, I'm also looking at the relative rotation graph. And then when I look at that, I'm just doing the top 20 up to the top 50.
Perfect.
When I'm looking at either the day, the week, the month, they're very different. So you might say CSL. If I'm looking at a day, obviously it's down, a week is improving, and then a month is leading. So I look at the month. But when I look at the months, they're very different to the week. So when I looked at I'm not too sure. I'm getting confused because the week, the day, the week, the month are telling me 3 different things.
They will, because it's about the volatility.
Yeah. So I'm just getting a bit confused.
No, that's okay, because the answer gets back down to, and I think I'll take this one because Janine tells me I'm the expert on the RRG graphs, but when you're looking at RRG, it's really about the time frame of your trading. So if you're day trading, then you'd look at daily RRG graphs. You wouldn't look at monthly. But if you're trading medium to longer term, say 18 months to 3 years, you're definitely looking at monthly charts. So if you've ever watched my Monday stock market report that I used to do on YouTube, but it's now in Talking Wealth, you'll see I always doing them on the monthly chart because we're looking for the bigger moves. So if you remember back into your course, we talk about the monthly chart shows you the bigger trends, so that's what you need to be looking at. So if you're medium to longer term, then look at the monthly RRG graphs. And I love it that you're doing the top 50 right now. When did you complete the course?
Just late last year in October.
Okay, yeah, so you're still relatively new and sort of out there
I'm
on your
new,
own.
yes.
Yeah, the other thing I
Yes.
might suggest if you want is to subscribe to Trading Essentials again, and the team will help
Yes.
you with this. So they all know about RRG graphs, and that way you get their weekly reports and you can send your trades through to them and get their help with all your trading plans and your strategies and all the trades that you're actually doing to make sure you're on the right track. So, but give the team a call in the office. But thank you very much for your call, and it's great to having a lady on the show. So thanks, Teresa.
Okay, thanks, Dale. Appreciate it.
My pleasure. You take care. Now we've got an email to share with you today, and this one is from Ryan. He says, "Hi guys, love watching the show. I've been starting to look into the ASX 50 and have noticed that the mining companies are all falling together. Now I'm undecided which stock I prefer out of these. BHP is obviously a favourite for a safer choice, but I've been looking at Pilbara Minerals, and when I look at the charts, it seems to drop around 30 to 35% a lot, and then reverses and goes back up the same amount. It looks like it could be setting itself up for another one of those runs. Also seems to be near a support level, which could help it go up. It also has a high dividend, which could help if it's held over a longer period of time. Now, I've done the Trading Mentor course and read your book, so trying to learn as much as I can for now. Can you tell me what you guys think and if I'm on the right track? Thanks, Ryan." So, Janine, I know you're champing at the blocks to get out.
I think Ryan must have a superpower, because
He
he
does.
said that whenever he looks at the stock, it falls 30 to 35%.
I've had people that tell me that. I said, just tell me when you're trying to buy, and
I want to know his secret.
and I'll go short. And when you're trying to sell, I'll go long.
Ryan, great question, great stock choice. And now let's have a look at the chart so I can go through it with you. All right, so on your screen right there, I've got Pilbara Minerals. Now, you know, how can you not like this stock? I mean, the way that it's pulled back is really in an orderly fashion. It's done it before. So I'm looking for some sort of predictability when I'm looking at the big picture, which when you see this fall in June 2022 and then sort of a repeat of a similar form, you know, this recent times, that is a big tick for me. Plus, it hasn't actually gone down more than what I would expect for this type of share so far. So we're seeing at the moment a 45% fall. I really like the fact that it's come back that far. A little bit further would be nice, which it seems to be doing at the moment, and then we might even see a reversal following that after the next fall. So I think that you're in the box seat at the moment. If it takes out that low, it's no big deal. When we look at stocks sometimes, we just say, if a stock keeps falling, we say, great. It just means that we didn't get tricked into a false trade, which there was no really strong trade there.
And we just wait till it finishes, stop falling, and then gives us confirmation of that, and then we jump back in on that next 35% run. So
yeah, exactly, and that's what I think, you know, will eventually unfold for you. It's just a matter of being patient and waiting for this fall to finish. So
Ryan gets a big tick. Yeah,
definitely.
Well, perfect, Ryan. Well, that is it. What we have on Pilbara Minerals. Now for our topic tonight, we all want to find stocks that rise over 100% or more. Now, these stocks are likely to get your heart racing. Now, in a good way, though. So stick around as we'll share stocks that we believe may be cheap with the potential to rise strongly over 100%. Now, some of you would call these stocks multibaggers. Now, we just call them great trades. Either way, we'll show you how to pick them. Now, on top of that, we'll share our top 5 buying opportunities. But before we reveal these, Janine and Phil are eager to share 3 simple tips to help you increase the potential of selecting stocks that could be multi-baggers and rise 100% or more. Ladies first, Janine, so how about you'd like to do the honours and start us off?
Well, fantastic. So absolutely, on your screen right now is our first tip, and that is look for stocks that have low debt. Now, that's a really good one, because often companies will, especially in this climate, if they've ranked up that debt, they'll be paying extremely high interest rates.
Well, they do, and they're less likely to get additional funding and everything if they've got high debts.
Well, yeah, I mean, you know, the individual investor might pay, 6%, but they could be paying 8 to 10% on this.
Oh, that's definitely true. That's definitely
so therefore, look for low debt because it's lower risk. And reason
so
being,
debt to equity ratio you're talking about?
Yes, exactly.
Okay.
And so in terms of debt to equity ratio, the market generally looks for something around 30%. But if the company's in a growth phase and they've got the ability to grow, then growing
50?
up to around 50%, is
Over
quite
that,
accepted.
No way.
Over that, look, it doesn't necessarily mean that the stock's going to be sold down heavily, but there's then a question mark over the risks associated with what's going on in the business.
All right, really good tips there, Janine. Now, okay, Phil, what's the next tip?
So next is ideally that you want to choose a stock that has a low PE ratio.
Okay.
And so price earnings ratio we're talking about here, and you know, generally the market around 20-22% is deemed an average PE ratio. So anything under that
On our market?
on the Australian market, yep. So anything under that is considered undervalued.
Yep.
You know, and this is where the fundamental traders look and see stocks that are undervalued for potential growth. One thing I will say is that there are times, especially in bull markets, where stocks can have really, really high PE ratios.
Yes.
And, you know, these stocks continue to run up, and sometimes traders can get caught into looking at a high PE ratio and, you know, missing a whole big run. But look, for now, a small PE ratio is what we're looking for.
It's preferable. All right,
Yeah.
well, the third tip is that we strongly suggest that you know how to read a chart so you can identify the best setup in both time and in price. Now, I know that's really important.
That is
guys.
hugely important.
It is.
And
So
it's
what do we mean
probably-
by that?
Well, it's just confirming what the big money is doing, or what, you know, is in reality is happening. So you could have great metrics in terms of the fundamentals, and then the stock price falls. So why would you buy that? Just because it's like only looking at one side of the story. If you're only looking at the fundamentals, you've got to look
Yeah, well,
at those.
fundamentals tell us what we should be looking at. It just doesn't tell us when. So that's the
Exactly.
time and the price, which we can get on the chart.
So true.
So anything you want to add to that, Phil?
Oh, look, no, we spoke about this last week with lithium. You know, the story's been so hot for so long, and the price hasn't gone anywhere.
They're
So
going down, yeah.
yeah.
So just be careful with all of that, because it really is understanding those charts. So if you do want to know those, maybe you might want to get my first book. You can still get it for free. You've just got to pay the shipping. It's just on our website. But I also have a question for both of you. So what if you don't know how to read a bar chart? What do you do? Where do you start?
Well, first thing to understand is what we were just talking about before. I think is in looking at the show and looking at the charts on the show, is understanding that the market is about psychology. So prices rise and fall based on supply and demand and what people are willing to pay. Most people can understand that concept, and if you can just look at the chart for that, then you'll be halfway there.
Yeah.
Look, I think you're maybe downplaying it a little bit. It's not an easy skill to attain.
Correct.
Chart reading is definitely a skill, and there are, I mean, you know, wealth within it predominantly technical analysts and chart readers. So I would say, look, seek professional help. It'll save you so many years of going down and beating your head down dead end roads.
Well, I mean, to me, I'm a chartist first and a technical analyst second. And what I mean by that is understanding reading charts. Now, I know people do make comments on our YouTube channel, you know, you don't get into the fundamentals or, you know, what the company does and who their CEO is, and we don't, because we're technical analysts. But what they also don't understand is we don't put much on these charts, but it doesn't mean we're not reading more onto the charts. We're reading a lot more than what we're putting onto the charts.
True.
But that is the skill that you're talking about. But most people might just put like a support or resistance line on. They may put a bit of a trend line on it or a moving average or something, but that's not fully chart reading what we're talking about. Like all of us can look at a chart with nothing on it and understand that stock.
I think it hit
And that
me.
takes time.
It hit me the most years ago when I first started looking at charts.
Yeah.
That I felt like it was a secret that someone had kept from me. You know,
It
the
is.
first time I saw it.
Shh.
So, and when you start to understand how to read it, it really blows you away. And the amount of comments that I get on a week-to-week basis from people that I speak to about it, it's just blown their mind. If they had known about it, they would have done it earlier. It's simple. Oh, I think we need to show everyone, as there's nothing like seeing it for yourself. So let's demonstrate some examples to help everyone identify these good trading opportunities.
Yeah, I can't argue with that. So how about we get into the charts, Janine?
All right then. So
We're going to the, so we've got Optima on.
So we've got Optima, and on your screen right now is TPG Telecom. Now, I picked this one, Phil, because I know that you were into the telcos and you identified that, the communication services.
Yep.
And look, this one, at the moment, the fundamentals are not really strongly pointing to what we'd class as a multi-bagger. And so you might be, you know, not you understand why I've picked this one, but people out there might be thinking, well, why'd you pick this one then for, Janine? We just want those multi-baggers because we're getting greedy now. But it's
It
not
has been a
about-
multi-bagger in the past.
That's exactly the point. Did you read my mind? Because I didn't share the secret
Oh, that's
with you.
scary.
Okay, so this was more about the issue here, which is this stock, if you look at the history of it, So you can do things one of two ways. And I guess when I first saw technical analysis after having studying fundamentals, that you realise that the chart shows you a really quick snapshot of what's going on. You don't have to pour through lots of numbers, and when you first get an understanding and education about how to do this, it's much quicker to see. So just from that chart, as Dale indicated before, you can see that previously this was a multi-bagger. This stock had gone up significantly. So where stocks have had significant rises like these in the past, and you can see that, you know, multiples, it went from $2, you know, 4, 5, incredible runs there, then it has the potential to do it again, you know. So that's really the point, isn't it?
Yeah, absolutely. And I mean, look, stocks go through different phases, and you know, like you said here, from early 2008, this stock's gone on a huge expansion phase.
Well, it has.
Right, and it's only natural for stocks to take breathers every now and then. So, yeah, you're right. I mean, I don't see why this stock can't go and repeat that process all over again.
So if you're looking for a multi-bagger, something that's going to do 100%, would you said before that just because the PE gets high, you're not necessarily going to rule it out. That was your point, wasn't it?
Yeah, and I mean, look, even fundamentals in total, you know, I'd predominantly like to look at price and make sure that what I'm seeing on the chart, because at the end of the day, let's be honest, we're trading price. You know, the story's there with the fundamentals, but really it's when you buy and when you sell is when those dollars go in the pocket.
Well, that's really interesting, guys, and thank you for those thoughts. Now, can I suggest everyone to check the stocks they already own in their portfolios, because they perhaps may already own the next multi-bagger, because remember, before you're considering adding more stocks to your portfolio, first you count what you have, as you may have already have too many stocks within your portfolio. Now remember, 8 to 12 stocks is all you'd need. Now if you do not know what that actually means, you've not read my first book, because we talk about all of that in there. Now the good news is that you can still get a copy of that book for free on the website right now. You just got to pay the shipping. Now team, what if they are holding a stock already that could be the next multi-bagger? Phil, what do you suggest they do?
Cheer.
Champagne.
Yeah. Well, they're generally the stocks they buy. I call buy and praise. People buy into it thinking that it's going to be a multi-bagger, but how do they know? Because they'll buy it and pray, oh, it goes up.
Yeah, well, you don't know.
But they don't know. But what can we help them with?
Look, like Janine said, you'll know in hindsight,
Yep.
and once the stock starts running, you'll definitely have an idea. You know, if it runs strong, in terms of trying to identify that it could be that. There's a multiple things you could do.
Can I ask a question then? Does the price of the stock have any correlation to whether it could be a multi-bagger or not?
Sure. I mean, look, generally the multi-baggers occur in the single-digit price stocks.
Yep.
Probably a bit lower. That's why a lot of people are so fond of and go into the specky penny stocks, because they generally can, you know, move 5, 10, 20 times.
But you don't have to go below $1 to find these stocks. That's the point.
No. We've, you know, there's many examples which I'm sure we'll cover that, you know, 5, 6, 7, even $10 stocks can go to $20. It's not always that 10 cent, 10, 20 cent, 50 cent.
Second question I have is probability of that. So what's the probability of picking up a multi-bagger stock?
Low.
Yeah.
Low, because I mean, if all stocks were doing this, it'd be
it'd be too easy. It's like shooting ducks in a pond.
It'd be too easy. And the thing is,
I disagree there actually, Phil, because I would say that your chances are higher if you're looking in those stocks. So so it depends on your portfolio type, doesn't it?
For sure.
So you know, if it would be low if you had a portfolio where it's sort of more medium to long-term strategy, and that's what you're looking for, and you've got very set criteria. But if you throw some of that criteria out the window and your whole goal is to find stocks that do that, you'll find that you'll be much more focused on getting those stocks into your watch list and your portfolio. So I went nuts actually trying to find, you know, initially trying to find stocks, and I came up with this massive list. You know, I was swimming in it basically.
Okay, cool. Because I know, I mean, I've obviously we've had relationships with lots of brokers across Australia for 2 decades, and lots of really big and great analysts.
Yep.
And to me, the lower the price of the stock is, like if it gets into the cents and points of the cents, the lower the chance you're going to get a multi-bagger, the more you're going to get it wrong.
The higher the chance of a loss.
Of the loss. So that's, they're different ways anyway. But anyway, this is really, really getting a lot more interesting at the moment, and it's exciting. So stay with us as we are about to reveal 5 opportunities. But before we do, What sectors will you look for multibaggers, Janine?
All right, where do I start? Shall I list
Well, there's
them
only
all?
10 or 11 sectors, so you don't have to go too far.
Can I say energy, materials,
Yep,
healthcare?
Yep.
I like them.
that's 3.
Mm-hmm.
You
Look,
gonna
I
argue?
agree. I agree. Healthcare and materials. It's generally those stocks that are exploring and they
Biotechs, all
hit
those
the
sorts
mother
of ones,
load, or biotechs. The medicine.
But
ones.
AI is another area that I've seen them in, because I was at the microcap conference last year in October, and there was some really cool AI stocks that we wrote about for Money Magazine. We wrote an article for that of some of the stocks in that. So if people go to Money Magazine and type in my name, they'll find the article. And I reckon there's 5 stocks in there, and I reckon all 5 of them are multi-baggers.
Oh yeah.
So, but AI is another interesting area.
Very nice.
Any last words
You
from
have
you,
been doing
Janine?
your
I know you
research.
like to have the last word, so what is it?
I just did.
Okay. All right. Now the Spence has been building up and we can't wait any longer. So how about we get into the charts and look at 5 possible multi-baggers. Now, Janine, I know you got the first one.
Okay, now this might surprise some of you. I've got on the screen there Santos. Now, Santos Limited, you'd think, how could this be a multi-bagger? Because it's not one of those highly volatile, smaller stocks. It's a bigger stock. But, if you look at the history of the share and how it's unfolded, it has the potential to double and, in a number of months. And I think based on the overall formation of the chart, it really has the potential. You and I spoke about this stock last week on the show and where we thought it could run. So I'm not going to go too much into how I think it will unfold from there, but it's really about if you can identify a stock and it's found sort of like this one here has a basing pattern, it's showing clear signs of that support, then in theory, if it moves up from there, it's more likely to hold that support. And that's where the trends are really important, isn't it?
Absolutely, and I mean, look, even if we just go back and, from 2014 July to March 2016, we've seen it fall from, almost $13 down to $3, and then again from $8 down to $3. So when it moves, it can move quick.
Yeah, so that's a multi-bagger in the opposite direction. What would you call that?
Ooh,
Multi-flopper.
I don't know. A really good shorter.
Great. Multi-shorter.
That's what a lot of new traders, they turn a good trade into a good buy.
Yeah.
So it's not a good buy, it's a good buy.
Yeah.
Exactly.
So that's
you
what
wouldn't
they
like
do.
to ride that one to the bottom, would
Well,
you?
we do. So what's our next stock?
Next we have HVN, Harvey Norman.
Ooh.
So interesting. Again, another stock that has been around for a very long time, and interesting that we're calling it a multi-bagger. But look, it definitely has the potential. It's positioned at $4 at the moment, and its all-time high is sitting up above that around $6.83. So at least 50% to the all-time high is definitely a level that it's been to in the past. And right now at $4, I mean, looking at the chart here, it's looking quite interesting. It's poking its head up now. It's had 2 very strong months. And if it can get through this $5 region quite strongly, I see it going to $6 quite easily.
Yeah, so once it gets through that $6 mark, then, it's going to challenge that all-time high.
Champagne?
Well, I think Jerry Harvey would be pretty happy about that.
You'd be jumping up and down on his beds in the showroom, wouldn't you? It's like, go for it. But you wouldn't expect Harvey Norman to be in your multi-bagger list, would you?
No, and like Santos, those ones. I can
Santos,
tell you that when
yeah.
I first started looking, I'm thinking, geez, we say to you not to look for little stocks that trade, at lower prices, and then here I am picking out all these stocks between $1 and $2.
Well, like some of those big stocks, I mean, Telstra got to 265.
Yeah.
True.
In its big 10-year rundown. So some of the biggest stocks have been at those low prices.
True.
So you never know. And we've got stocks like Appen that's really down at its all-time lowest price, and that's in a good area. We've got other stocks like you've been mentioning.
I've identified about 20-something shares of these shares.
Well, even
but we
Megaport
can't
we
show
talked
them all
about
tonight.
before. Megaport looks all right. It was on my caution list yesterday for my recording. So it's like, yeah, look at it, but just wait.
Great.
But that could be a multi-bagger as well. So what's another stock?
All right, we've got a Luca, which is really interesting. So you have a look at this and the history of it, and you can see some really good runs. I'm just using the monthly chart here, but if we go to the weekly chart and have a look at what's unfolded on that weekly chart, you can see there on the left-hand side of the screen, when it gets going, it really gets going. So it got down to $3 at one stage and then went above $6 in 2018, and this beautiful run out of the 2020 low. But as we were saying before, it's all about the timing, isn't it, Phil, as to when you do it. So this stock might be great from the fundamental point of view and tick all those boxes, but then we've got to match that up with what it's doing. And right now, let's have a look at the short-term picture. It's not telling us anything about the direction yet. You know, there's potential for it to fall even lower, but you know, we may see a move back up, and that's what we've really got to be patient and waiting, just sitting in the box seat waiting for.
Anything else you want to add, Phil?
No, look, I totally agree. It's definitely had a pretty severe fall from June 2023, and there's no real signs yet for me technically that I would be looking.
Because I know when we're looking at trading, like you can have something that's technically strong, we can have something that's fundamentally strong, we can have something that's technically strong, fundamentally weak, or technically weak and fundamentally strong. Now I know the ideal is to have both strong, fundamental and technical, but you don't always get that. So this is where you've got to combine those things. And I know when we've done the research on that, if they're both strong but technical and fundamental, it runs harder.
Yes.
So we're trying to get that, but if it's technically good and fundamentally weak, the run's still there, but it may run out short. It's more shorter term trade. Technically bad and fundamentally strong, it can still fall away, which is what you were saying earlier. We've seen that with the lithium stocks, etc. But then if it's technically weak and fundamentally, it's just go home, go to play golf, do something else, because it's all over Red Rover.
You did so well then. You really could have muffed that one, but you just did brilliantly, I thought.
Thank you. I haven't been drinking tonight.
But,
From all that, so we got another
stock.
stock.
This one fell 50%, so that's one of the things that's on our list, isn't it? Tick
Absolutely.
the box if we find something that falls 50%.
So what's the next stock?
We can get into another one, sure.
We've got. Well, we had 5 to give them. How many we've done? 3.
I think we've done 3 or 4.
Yeah, we don't want to shortchange them, so
No,
let's
we
get
don't.
moving.
No, I get all the phone calls and the terse emails and stuff, not you guys.
So GrainCorp, you know, GrainCorp we've got up
Yes.
on the chart here. If we can have a look, we've got instantly to me you can see this stock from December 2020. It's gone from $4 all the way up to $10 in the matter of 6 months.
Well,
Question is, will it go through that all-time high? And if it does, that's around $11, which could lead it to 12, 13, 14. Do you think it's got the potential to do that? And what would you wait to see?
Good question. Absolutely, it's got the potential. I really like, if we focus on the weekly chart, how it's having this contraction consolidation period here. So it's definitely being accumulated, and if it were to break out from these levels, potentially up above 830, 850, then you should start to get excited. Because look, the run that it's had from 2020, it's been so parabolic, and even the pullback, you know, it is quite volatile now in its life, this stock. So I don't see why it can't continue the trend.
Well, one of the reasons that this came up on the list was because of the research I'd done into commodities, and I found that a lot of the commodities had fallen to around 50%.
Yep.
So, you know, the agricultural commodities. So that's really ticking boxes for me, and I'm thinking, okay, what sort of stocks can I find online, you know, looking at different groupings of stocks that could be beneficial to. So I thought, well, GrainCorp, it's already had a nice strong rise. It's got some history now. Prior to that, it looked just absolutely woeful, but I'm thinking this could be the nice run, and it's setting up really nicely too, which you said. Great. Now the next one is NHC, which is an energy stock, so but liking that energy space as well. This sort of fits the bill there. And I just think this looks incredible in terms of how it has these incredible rises. I just see that there's another huge opportunity setting up. So I'm just going to expand that monthly chart so that you can all have the bird's eye view of it. But to me, that looks incredibly bullish. And if it manages to trade up above the high of November 2023, we could see it take off to challenge the all-time high. And then if it does that, you know, if it gets past this prior high here in October 2011 as well, I'd be really excited about where that could go.
I mean, trends well, doesn't it?
Doesn't it? So the question is, you know, look how many times it's done this. If we just have a look at these little rises up, this one here, it's 87%. It's very close to that mark. Again, we've got 120%. So that's the sort of thing that you want to look for, just to see if there's any repeatability in these ranges. 137. What I found interesting about that is when you're looking at larger stocks, as they get to the highs, those ranges tend to reduce, as we know. You know, that sign of the volatility as you're getting to the high. This one, it actually increased, and that was actually building, you know, the view as well that potentially it could be leading to another rise after that.
Now, I'm not sure how whether I've used 4 fingers or 5 fingers. Have we got one more stock? Or is that it?
That's it.
That's it.
Five,
So I lost count whether I had done
I've
more
got another
fingers.
20, but that's
No, I
for
don't have
after the
any.
break.
Look, I've only got 20 fingers and toes, and I've got shoes on, so it's not going to happen tonight, okay? So we'll get to the other 5 in the second
Great,
half, all
that'd be
right?
fantastic.
So basically what you're saying, you don't necessarily have to go to stocks under 10 cents to get multi-baggers.
Yes.
Because some of those are bigger stocks, and surprisingly, some of those are bigger stocks in terms of, and well-known stocks, so you don't always have to go to what they would call the penny dreadfuls.
Yeah, the sort of
get-
setups that we saw, like on that last chart, on the monthly chart, the way it
Yeah.
had consolidated, what we saw on the chart with Aluka as well, just that coming into that long-term low. Just look for things like that where you can tick boxes to say, yep, all of these things are happening.
Because what I was thinking of is what you're trying to say is we need to increase the probability of getting a multi-bagger by doing X, Y, and Z.
You've got to do the
research.
analysis.
Don't just buy
as
and
well.
pray like I was talking about before.
Not
like
just
a lot of
take a
people.
tip, because there are a lot of tips online about these sort of things and you don't want to do that. It's about the timing of it, absolutely.
Perfect. Well, that is it for our topic for tonight. Now, if you believe you're holding any stocks that are multi-baggers, make sure you call the show on 039290 9988, or you can text the number on your screen right now. Now, we'd love to take a look at your stocks and give you our opinion. Now stay with us as we still have got plenty of emails and stocks to go through. But before we get into these, for those watching on YouTube, you can watch all of tonight's show plus the exclusive content on talkingwealth.com on those 5 extra stocks that Jadid has. So head over and grab your free 7-day trial. Now the benefit of being a Talking Wealth member is that you get our in-depth approach to a lot more stocks and answers to a lot more questions. Now added to that is that every single Monday you also get to watch my weekly Australian stock market report where I share my views on the market and some great opportunities. Now on top of that, you also get hundreds of amazing interviews with industry experts from around the globe. This is all on talkingwealth.com. Now in the last show we had before Christmas, we created a special free membership on Talking Wealth for those who are not yet subscribed. Now in this membership, I curated some of my favourite interviews and put that into a special free subscription. Now this membership includes full episodes of this show from December plus several of my weekly stock market reports. I also added interviews of experts such as golden currency expert Dana Samuelson. Now you can still gain access to this free subscription. All you need to do is simply click on the link in the description below on YouTube and supply your name and email address. You can keep your credit card in your pocket as there is nothing to buy and it is totally free. Now this free membership will only be available for 1 more week. So get into it as soon as tonight's show is finished or you will miss out. Now it will be turned off on the last day of January. All you need to do is click the link below this video in the description to gain access. Now moving on, we're going to get into some more questions. So now's your time to pick up your phone and give us a call on 0392909988. That's 0392909988, or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Now it's time we get into our next question, which is from Rez, who says, "Hi Dale, Janine and Phil. Thank you for your technical insights of Australian markets and sharing your expert views. I have read Dale's books as well as a couple of other books on short-term investing and like to start getting my hands dirty. I've already got a few shares such as Macquarie for long-term investment that I have bought just after COVID based on your advice on this show and your book, and I'm very satisfied with the return. I just wish I had bought more back then. My question is regarding FCL for short to medium term trading. It has been trading over the 20 moving average line in the past few weeks and looks bullish to me, but I am still very new to trading and would like to know your advice with your technical lens. Also, is it safe to say this stock is now in an uptrend or still very early for this to claim? If I do enter the market, I would definitely use a stop loss of $2 to be safe. Thanks again and appreciate your time. Kind regards, Rez." Janine?
Very interesting.
I'm out of breath now after all of that.
Yeah, I know, that was big, wasn't it?
I know.
Well done.
So
now,
Rez.
Now, can I just go into the stock, looking at the chart
for
here?
life.
We can see on the screen there, what's really interesting to me is the way that this stock has actually unfolded. So first of all, I guess I'd say congratulations in picking a really interesting stock and thank you very much for that. Looking at the way that it's fallen into that March low, it's just a beautiful unfolding that I'm really excited about. So And it looks like it's tried over and over to find support. The sellers they don't have any commitment to pushing it lower. All of these lows here are indicating that, and the fact that it's trying to move up now. But as far as the trend goes, it hasn't reconfirmed a new uptrend here just yet. So I would be really patient with this, because I can see on the chart there that, I'll get my crystal ball out. That's what it sounds like, doesn't it? And have a look here. Yeah, and you can see there that there's a really important resistance level there. So this is for me personally, but I'd like to see it really close strongly above that level, because it hasn't really managed to stay above it much. So Phil, have you got any comment you'd like to make?
Yeah, look, the only thing I'll add, Rez, is you mentioned you're going to put yourself a $2 stop. Now, we're looking at monthly and weekly charts here, and I'm probably guessing, putting my short-term trader hat on there, you're probably going even shorter, because that $2 stop is quite tight, given we've got a low, if you wanted to keep it really tight, we've got a low at $1.80 here on the weekly chart. So for me, the only thing I'll add is just be careful with that $2 stop. And again, I'm not sure how short he is trading, so it might be okay, but if we're looking at the weekly chart, perhaps give it a bit more room.
Fantastic. Good advice there, Phil. Now, we do have a text, and this one is from Nathan, who's asking about LOV. Now, he says, hi guys, just wanting to see your opinion on Lavisa Holdings. Where do you think it could be heading? I entered it on December 18 at $23 and am looking for the medium to long term. I do have a 15% stop loss in place. Many thanks. Nathan, what do you think about this one?
Okay, so he's got a 15% stop loss in place, so tick, well done. Where did you say
he bought it in December?
In December, so he bought it in December at what price?
What is it, $20 something, wasn't it?
$20
$23, sorry.
$23.
$18.23, sorry.
Oh.
I'll get it right.
Please do. So he's actually bought.
December 18th at $23. Sorry,
yeah.
You had all the numbers there.
Okay, so it looks like he's picked some sort of entry around this level here, which is interesting. So I'm just going to put a horizontal line on there so we can really see. It's around that level there, which I don't have any issue with that. I'll have a look on the weekly chart in the moment, but it actually looks like it's just pulling back to find some support after such a big rise. Let's just go to the weekly chart and have a look. Now, there may be a trend line down there which looks interesting, so I'll just see if I can get a trend line on the chart there coming down, just to see if we can tick that box off, which is nice. So, that had two closes above a trend line. I have no issue with this trade. I think it's actually quite nice. It's just a question of how much it's going to come back to try and confirm support at this point.
Yeah, 100%. It's had that really nice run up. We can see here the two weekly bars that we're highlighting. That they're really, really strong bars. So it's not unnatural here for it to pull back. So yeah, look, he's got the stop loss in place.
Entry is good?
Entry's fine.
Yep.
Entry fine, stop loss great, trending stock.
Yep.
Both giving it a thumbs up.
And just looking at where that distance is from roughly where he's entered to that high, there's probably about 18% to the all-time high there, though it is quite strong. So you've got to expect that this pullback was going to happen given the strength of that resistance around that level. So yeah, I just say he'll have to stick to his rules. Have a good exit strategy is really important.
Great
advice. Looks like this is the sort of stock that would give you a decent exit after a strong rise.
Perfect advice, perfect advice. If you want to chat to us, give us a call on 9290 But let's get into our next question, which is from Matt, who says, hi Janine and Dale. Love to watch your show on YouTube and eager to hear your wisdom. The share price of a Chalice Mining has been diving so much. One Australian Financial Review article said short selling should be banned, but another article said short selling is a good test on the company. Now, I don't really understand the strategy of short selling and its pros and cons. Now, I recently bought 1,000 shares of CHN at $1.50, thinking it was low enough, but it's now just above $1. My questions are, how could small investors know early enough that any share is targeted by short selling? And secondly, when would short selling finish or funds achieve their goals? And should the share price start to rise? Best regards, Matt. Great question.
Good question. Good question.
Is it really transparent when people are short selling anyway? That's my first point.
Here we go.
Given that they don't have to notify the market until after a certain amount of time after the event.
Yeah, look, I know you've got your views on short selling, and so do I. Look, I think the important part of his question here is that he's asked, how would you know early on, pick it early that they're short selling, and it's not an easy thing to answer, because he's got to remember, you know, if you're up against the hedge funds, which are the major short sellers out there are hedge funds, right? And they've got teams of analysts, junior analysts. They've got people talking to the CFOs, CIOs of the companies themselves, having meetings, and so they're, you know, constantly checking, reviewing the health of these companies. Without that resource, the best thing will be to do is look at a chart, and you don't have to be first. That's the beauty of it. You don't have to be first. Look at a chart. If a stock starts falling, if it's had a really parabolic rise for no reason or no news, perhaps that's an area there, you know.
Well, we've seen JB Hi-Fi heavy on a short seller list for a long time.
Yeah.
Harvey Norman, and there was a few others that just kept rising.
On the ASX.
Yeah.
We can look at the short sellers.
And I know there's a
anyway.
short seller list, so you can look at the percentage short seller list. But quite often for investors, and even sort of more, can I say more inexperienced traders, it doesn't mean a hill of beans to them.
Yeah.
And really that's sort of what you're saying is, forget about that. If you've got a buy signal and a sell signal, that's what you should be taking. Now, obviously Matt has had a 50% loss on the stock, which
That's
means he
tough.
doesn't have a stop loss in it. So regardless of how many short sellers, and if he'd had a 15% stop loss, there'd be more money in his skyrocket right now. If
Yeah, it
he'd
wouldn't
used a
matter
stop
what
loss.
stock it is,
It
really.
wouldn't matter what stock. So that's really what we talk about is it doesn't matter what the big end of town are doing. If they're selling, as long as you've got a stop loss, you're protecting capital or profit.
Yep.
And you'll get in when they're buying in. So you don't
It
need to
doesn't matter that we
complicate it.
think it's wrong, and
Well, that's another show we're going to talk
especially on
about.
smaller stocks like this. I mean, come on, we're just letting them be prey to the you know.
Correct, we
It's just
are.
ridiculous.
But I'm just talking about what should Matt do.
Yes.
And to me, the answer is he's bought into it for a reason, and then he's found out about the short selling, but he should have had a stop loss on it.
That's right.
And with that, he'd be sitting pretty right now, waiting for it to bottom out and then
I
come
would
back
say,
into
look,
it.
you know, it's tough. It's a tough learning experience, but he's actually got a lot out of that loss.
He has.
Right now.
You learn
given
a lot
that
from
he
this,
is
don't you?
Open to it and learning.
Fantastic. Well, thanks, Matt, for that email. But let's get into our next email question, which is from Gerard, who says, "Hi, Janine and Dale. Thank you for your Tuesday night show and for your great insights and guidance. Truly appreciate it. I'd like to have your thoughts and professional analysis on these two stocks, please. Orbital Corporation, who are into drones and defence industry. Now, is it the right time to buy some units of that stock? Kind regards, Gerard." Now, Gerard, we've only done one stock. We don't do two stocks per question. So if you want us to look at the other one, you'll need to send another email in next week. But let's have a look at the stock.
It's interesting, isn't it, how we
Yes.
can follow a theme or
Yeah.
a flavour in the market and then think that we should be buying
Correct.
certain stocks, which it's so great that
How
he's
often
actually
does that
looking
happen?
at
We get
this. Well
stocks all
done.
in the same area
Yeah,
for
he's
going
asking
bullish
the
or bearish.
question first,
Yes.
and the chart, clearly, if we look at the chart quickly on the screen there, it's clearly showing stay away.
Look,
Okay.
yeah, I mean, but I'll commend him on Gerard on picking a sector that is very, very interesting. You know, drones, we just spoke about a drone stock, and very, very
But
interesting.
that was better than this one.
Very interesting sector. Yeah, that was better than this one. In terms of the chart, probably a bit early, Gerard. You want to see some price moving up before you thought about it, or if you're really risky.
Okay, so this is high risk, right? That's what we're talking about here, isn't it, really?
Well, it's almost as high as it gets because the
Yeah.
stock's 10 cents. It's trading at all-time lows. It probably is quite illiquid, although there is, you know, some volume definitely coming in around January, which is, you know, quite interesting. But in terms of a technical perspective, you would want to see price move a little higher because, you know, look, there's history on this stock. It's gone from all the way to $50 down to zero. So, yeah, I'd say, Gerard, great idea, great sector, but possibly just
Not the right
He's
timing.
way
the
ahead
right
of his
time.
time.
Yeah,
potentially.
that's a good way of
potentially,
putting
yeah.
it.
Way ahead of his time. So just chill and sit back. And
Let price show you that it wants to go up a little.
Well, my thinking is let somebody else take the risk.
Yeah.
Yeah, that's
You know,
a good
and
way
that's
of
what
putting
too
it.
many people try and get it at the lowest price, and it's like, well, that's the highest risk. So let somebody else take all
And
that
ride
and wait
on
for
their
it to move
back.
up. Because who cares if it goes up to 20 cents
Yes.
and you buy it there and it goes up to 60 cents? You've still made 3 times your money.
Yep.
Especially when it's had an all-time high of $50.
Correct. So there you
Great
go.
point.
All right, well, let's move on. We do have a text now, and this one is from Michelle, and she's asking about Woodside. So she says, "Hi, guys. I've owned Woodside for about 18 months. Now, I brought it around $35. It is now around $30. Happy New Year, Michelle." Thanks, Michelle, for your Tex, what do you think of Woodside?
I like it.
You like
Energy
it?
sector I do like, so well done, Michelle. And we talked about Santos earlier. Woodside's the same sort of thing. I'm really looking forward to seeing Woodside take off again. I don't think it'll be too
She's down a little bit.
It is.
Yeah. But look, last month it actually closed high on the bar. I'll just expand this up so you don't have to get your binoculars out, Dale.
Thank you.
Okay, so you can see there the close there is at $31. Now, the price is actually sort of sitting there this month as well. So I think there's a bit of, agreement about what the value of Woodside is. I'm not saying that the run's definitely over, but just the way that it's unfolded, that sort of same pattern again and some support here potentially, I'd just be watching that very carefully.
Yeah, I agree. $30, it looks like there's been support in the past, and right now it's not giving you any real reasons to worry that it's, if it goes below the low here, the weekly low.
So where should she did mention a stop loss.
She did?
She didn't.
Okay.
So it's gone from 35 to around 30. So that's what she was saying. She bought it at 35 and it's around 30 now.
Well, she needs to think about, well, how much more does she want to risk? That's not
That's what I
really
was
a
asking.
decision that we can make. But there's potentially that it could, if worst case scenario, I'm just going to put a line on the chart here.
Yeah.
It doesn't mean it will fall back to this level, but worst case scenario, it could come down to these levels around at $25. It's possible.
Right, so
And
she
we'd-
needs to put a
we'd
line
be-
in the sand of what she's
We'd
going to
be
do.
rubbing our hands together if it came down to that one.
We would, babe. Anyway, let's move on to our next question. And this email is from Dave, who says, "Hi, Dale and Janine. I'm loving your weekly show. Thank you. Always entertaining and insightful. Given the general market predictions of growth on the way in 2024 and beyond, I'm waiting to enter the stock market ASAP using equity received from a recent property sale. Now, I intend to buy 7 to 8 ASX 20 stocks for the medium term, with a stop loss of 15% in place for each. I'm currently in module 2 of your diploma, so have learned of benefits of a stop loss for mitigating risk of loss. And my question is it wise to have a 10 to 15% stop loss in place below the buy price for these types of blue chip stocks, given they are known to recover well and are considered low risk? I'd hate to be counted out of the market too soon due to a minor counter downtrend. Thank you, Dave." I know what I'm going to say, but
I know
I
what
reckon
I'm
you
gonna
guys.
say.
Well, you go first.
Well, can I say this? I can't say this word, but I
You
think
can.
I'm
Under the
going to
breath.
pick something a bit higher up in the body. I think you're gutsy, which is great. You've got to have some guts to be in the stock market. However, maybe a little too early in that, I would never, just me personally, I would not sell a property if I was just a beginner learning the stock market and then go and try
Well,
to
you might
put
have
it,
just sold it anyway for
put
whatever
it all
reason.
in the stock market, even if you just started right now. There's so much more that you need to know in that module 3. I would even be saying, wait till you do module 3 and
Well, he doesn't need to do it ASAP. That's sort of what you're
that's
saying.
what I'm saying. There's not a huge amount of hurry, right, to get into the
And-
market. The market will still be there.
And to me, and I'll get to you in a second, Phil, because
Yeah.
I know you got something awesome. But he does, like some people go, oh, I've got $200,000, and they go and buy 8 to 12 stocks today.
Yeah, they'll say, Dale wrote in his book, I've got to go and buy 5 stocks.
And you don't do that. So
Yeah.
my suggestion is he just eases in, buys 1, 2, whatever else. But don't be in a hurry, because you can also be in a hurry to get it wrong.
Correct.
And to have that issue. But I want to know, but his question is, well, is it wise to have a 15% stop loss if some of them just drop away but they always come back?
Yeah, look, there's a caveat around that. Some do, but then some don't come back. You know,
Telstra went down for 10 years.
Okay. And
Brambles, Aristocrat Leisure, the
list goes on.
CSL, they all go down.
Yeah, and if he ends up being in a situation where the market is also falling, like it's had its times in the past, it could be all over Red Rover for him. So I would agree. Take your time. You'll get into the next module and you'll learn about back testing. Look, 20% is generally, most analysts, when a market falls 20%, they say it's the bottom's there, and they normally measure 20% as a correction in the market, if you will.
Yeah.
So having a stop at 20% or 15%, I would say the more work you do, you'll start to know the stock. You'll not only base it on a number, you'll also be able to pick it on where the stock is in its on the chart, and really hone that stop loss so that you can really get yourself in a good position.
I had another thought too, Phil, which was that he could just sort of look at it and think, well, how much should a beginner with their L plates on be putting into the market and work it from that way?
It'd just be a staged
based on the
approach.
amount of risk,
But just to wrap up, what Dave's trying to do is change the rules that we're teaching him.
Right.
So we teach you the rules, Dave, for a very, very good reason. Set your 15% stop loss. If you buy a stock, stick to it, don't change it until you get more
Until
experience.
he's got experience to
until
know
you really
what-
know what to do. Once you get into Module 4, you'll be able to talk to the team on trading essentials and help them with your trading. So that's what Janine's saying. Get through Module 3 and do that. But let's move on now. Now remember, I want to remind everybody to hit that like button to show their support for our channel. And so just click that subscribe button as well. So click the like button and the subscribe button. Now it helps others find our channel so that we can help them too. So remember to show your support for us by commenting below this video as well after the show, because we'd actually love to hear your favourite part of the show and how great Phil was tonight. And remember to give us a big thumbs up. It really does help new people discover these videos. And also remember to take up our free Talking Wealth Christmas bundle right now. Now by clicking on that link below in the description, you can take it up now and watch the last 30 minutes of the show. It only takes 30 seconds and we promise it's worth doing. That's it from us, from our YouTube video viewers. For Talking Wealth subscribers, stay tuned for the bonus content we promised. Next week, we give you our views on the best Bitcoin trading rules and cryptocurrency strategies. So make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love this show, then show your support for the team that puts in the effort to bring it to you each and every week. Give them a big thumbs up and subscribe to our channel. That way you'll know when we put up more content. As always, thank you for joining us. For now, goodbye, good luck and good trading.